Welcome back to the Deep Dive. Our mission here is pretty simple.
We give you the sources, we give you the insights.
Exactly. We slice through all the noise and just pull out what you need to know to get informed fast. And today, we are laser focused on one of the hottest sectors out there right now, semiconductors.
Oh, yeah. January 13th was an absolute barn burner.
It really was. Yes. Massive movements. And it seems to be driven by, well, two main forces.
The huge, and I mean accelerating demand for AI infrastructure.
And a whole flood of really bullish analyst upgrades.
So we're going to do a deep dive on the three stocks with the biggest percentage gains that day.
That's right. We've got MACOM Technology Solutions, Intel, and of course, AMD.
And for each one, we've structured this to go, way beyond just the headlines.
We'll hit the basic profile, what news actually caused the move.
Then the cold, hard reality of the financials, the valuation.
What the charts are telling us, and then we'll run a quick, fun paper money exercise.
Just to see what that one-day surge really looked like in dollars and cents. And just one quick note before we jump in.
Of course.
This analysis is purely for educational purposes. We're just distilling the information from the sources we were given to help you understand what's moving the market. This is not investment advice.
Okay, let's get into it. First up, the biggest percentage gainer of the day, MACOM Technology Solutions Holdings. Ticker is MTSI.
Now, this is a much smaller player in the grand scheme of things.
Yeah, about a $16 billion market cap.
And they're headquartered here in the U.S. They really focus on the enabling technologies for telecom, industrial, and defense.
The I&D segment?
Right, and the big one, the data center industry.
And it's that data center connection that really lit the fuse here, didn't it?
It absolutely did. MTSI surged 8.08% on the day.
Which capped off a massive week for them. What was it, up over 24%?
24.3%. And the catalyst was pretty straightforward.
Analyst upgrades.
Analyst upgrades, yeah. Specifically pointing to their role in AI infrastructure growth. There was also some chatter about their satellite business prospects in the news just before this run-up.
It's like the market is finally waking up to the fact that AI isn't just about the big processors.
You need all the connectivity, too. The plumbing.
Okay, so let's get into the valuation, because this is where the story gets a little contradictory.
Yeah. This is where you have to do a real deep dive.
Because you look at the bottom line today, and it's ugly.
It is. Their trailing PE is negative.
An earnings per share of negative 81 cents, profit margin of minus 5.6%.
A company that's losing money running up 8% in one day.
That usually raises a few red flags.
It should. But this is why you have to look at the other pieces of the puzzle. The contradiction is really solved by two things.
Growth and liquidity.
Exactly. Their sales, quarter over quarter, grew over 30%.
30%. That's a huge signal that customers are buying their products right now.
And they're selling them profitably. The gross margin is nearly 53%, so they have pricing power.
So high-demand products, profitable sales, but the company itself is bleeding cash. That sounds like they're just investing heavily in the future.
That's the story. And if you want to know who believes that story, you just have to look at the ownership.
Okay, so who owns this company?
Well, this is one of the most interesting data points. Institutions own a massive 94.47% of the stock.
Wow. That is extremely high institutional conviction.
They clearly believe these current losses are just temporary and that the long-term AI narrative is going to pay off big time.
But wait, hang on. If the institutions are that convinced, how do you explain the insider trading data?
Ah, the other side of the coin.
Our sources show some pretty significant recent selling.
That's right. A 10% owner, Susan Ocampo, and the CEO and CFO were all selling in the back half of last year.
So you've got massive institutional belief on one side and key execs taking profits on the other. What does that signal?
It signals a divergence. The insiders know the immediate financial challenges, that negative PE, so they're locking in gains.
Well, the institutions are looking further down the road.
Years down the road, they're betting MTSI's tech becomes indispensable for these AI networks. It's a classic risk-reward snapshot.
That context is everything. Okay, switching to the technicals. After a run like that, MTSI is, well, it's looking a little exhausted.
It certainly is. At $213.52, it's now 7% above its 52-week high.
And the RSI, the Relative Strength Index, is way up there, 76.27.
And that's a big red flag. The RSI measures price momentum. Anything over 70 is generally considered technically overbought.
Meaning it's run too far too fast. It's probably due for a breather.
Right. And the fact that it's trading over 55% above its 200-day moving average just reinforces that explosive, maybe unsustainable momentum.
So for our paper money simulation, what did that feel like?
Let's say you put a paper investment of $5,000 into MTSI at the previous day's close of $197.55.
That would get you about 25 shares.
Right. And that single day's jump to $213.52.
So would translate into a paper profit of what, just under $400?
Plus $399.25. A powerful short-term move, but the metrics show it's a high-stakes game.
All right, let's move on. Our next mover, Intel Corp, ticker INTC.
And here we're going from a $16 billion niche player to a $235 billion behemoth.
And one that's trying to stage one of the biggest corporate turnarounds in recent history.
It's a very diverse company. You've got client computing, data center, and AI, and the really critical new focus, Intel Foundry Services.
And Intel saw a really strong jump, 7.33%. The news here felt both immediate and very forward-looking.
It was. The big catalyst was KeyBanc upgrading the stock to overweight with a $60 target.
And the reasoning was that intense server CPU demand from the hyperscalers.
Right. The sources say that their 2026 supply is almost sold out.
Which is just incredible.
And because of that, Intel is now considering a potential 10 to 15% price hike. That's huge pricing power news.
But it was more than just sales hype, right? There was good news on the manufacturing side, too.
Oh, yeah. The news that their 18A process yields are topping 60% is a big deal.
It suggests the roadmap is actually working. They might actually be able to compete with TSMC.
And potentially win new business. There were reports of Apple considering them for 18A foundry capacity.
Now, when we dive into Intel's valuation, this is maybe the single most shocking number in all the sources.
I know which one you're talking about.
Their trailing PE ratio it's staggering. 4,461.
It's not a typo.
No, that number reflects an earnings per share of basically nothing, just 1 cent historically.
And that extreme PE tells you two things.
First, their margins are razor thin.
Right, profit margin is only 0.37%.
And second, the market is not valuing Intel on its history at all.
Not at all. It's valuing them purely on the expectation of massive future profitability. It's all about the turnaround story.
And that's what we need to focus on, that expectation, because the forecast is dramatic.
Oh, it is. EPS for next year is expected to surge by over 82%.
So that's the justification for the price tag. The market is betting the foundry business, and AI demand will finally bring that 4,000 PE back to earth.
And we saw them shock analysts recently with a huge EPS surprise.
Over 1,000%.
1,192%, yeah. It signals that maybe those turnaround efforts are starting to pay off faster than expected.
And technically speaking, INTC is also showing some serious momentum.
Very similar story to MTSI. The price, $47.29, is over 3% above its 52-week high.
And the RSI is right there on the edge, 70.98.
Borderline overbought. The whole chart just screams momentum. It's trading almost 68% above its 200-day average. The market loved that KeyBanc news.
So for the paper money trade,
A $5,000 investment at the previous close of $44.06.
that move resulted in a paper profit of plus $364.71.
Another huge gain, but it's all predicated on future hopes.
Okay, on to our final big gainer. Advanced Micro Devices, Inc., AMD.
And AMD is the heavyweight of the three, market cap of nearly $360 billion.
A direct competitor to Intel in all the key areas. Their segments are right in the heart of this AI theme. Data center, client, gaming.
Especially data center with the server CPUs, the GPUs, the AI accelerators. That's the engine.
And AMD gained 6.39%, driven by the exact same tailwinds as Intel, but it felt magnified by the analyst excitement.
It really was. They got two huge bullish calls. KeyBanc upgraded them to overweight with a massive $270 target.
And China Renaissance started them with a buy rating and an even higher target of $291.
That analyst confidence is completely rooted in the AI story.
KeyBanc is forecasting at least 50% server CPU growth.
They're projecting a massive $14 to $15 billion in 2026 AI revenue from their next-gen chips.
And there it is again, the same key takeaway we saw with Intel.
Yep. AMD is reportedly almost sold out of 2026 server CPU capacity.
And they might raise prices 10 to 15%.
It just confirms the AI arms race is driving immediate and significant revenue expectations across the board.
So let's talk valuation, because this is where AMD is fundamentally different from Intel.
It really is. AMD's current PE is high, sure, 109.
But the forward PE drops all the way to 33,
And the most important metric here is the PEG ratio.
which is at a very strong 0.72.
So for anyone who might not live and breathe these ratios, can you just quickly define that?
The PEG ratio basically takes the PE ratio and divides it by the expected earnings growth rate.
And a PEG below 1 often suggests the stock is actually undervalued when you factor in its projected growth.
So while a PE of 109 sounds high, that 0.72 PEG means the market believes the growth rate more than justifies the current price.
Exactly. And their growth projections are phenomenal. EPS next 5 years forecasted at over 46%.
They also have an excellent balance sheet, very low debt,
But we do see that same pattern again.
insider selling.
Yep. Repeated, large value sales by CEO Lisa Su and other executives all through the back half of last year.
It's just a recurring theme, isn't it? Market conviction versus leadership profit-taking. Now, AMD's price action is actually quite different from the other two.
It is. At $220.90. High.
And critically, the RSI is moderate, 55.13. It's not overbought.
Which suggests it has more room to run without needing an immediate cool down.
It's above its short and long-term averages, but it is slightly below the 50-day.
Which just hints at a little consolidation or resistance. But you have to remember, with a beta of 1.93, AMD is highly volatile. It can swing big on any news.
So closing out the paper money scenarios.
A $5,000 investment at the previous close of $218.69.
So all three stocks offered immediate, significant gains, validating the market's excitement that day.
So if we tie this all together, what's the big picture? The synthesis is, I think, very clear. MTSI, Intel, and AMD all benefited from this massive surge in confidence around AI infrastructure.
And the single biggest piece of news driving all of it
is the forecast of sold-out server chip capacity all the way through 2026 and the 10 to 15% price hikes that are expected to follow.
That's the core takeaway.
Right.
But the differences in their valuations. That's where the insight is for anyone listening.
Absolutely.
You have Intel, whose trailing PE of over 4,000 just screams historical risk. And it's a pure speculative bet on a turnaround.
Right. Then you have AMD. And thanks to that strong PEG ratio, it shows its high price is relatively justified by its proven aggressive growth. It's a high-growth company acting like one.
Intel is betting on execution. AMD is executing now.
And that brings us to, I think, the most fascinating point of this whole deep dive.
Okay.
If the giants, AMD and Intel, are reportedly selling out their 2026 capacity, what does that aggressive multi-year demand signal for the smaller connectivity players in the ecosystem?
Right. We saw MTSI soar despite its negative PE just because it plays in that connectivity space.
And other companies cited as crucial AI connectivity plays like Astra Labs and Credo, they also saw really strong gains.
So the demand signal isn't just for the brains of the operation.
It's for the entire nervous system. Every cable, every switch, every component that lets these massive AI data centers talk to each other.
The sheer scale of this AI build-out is creating a rising tide across the entire supply chain.
And if those smaller players can execute and deliver the capacity, their growth potential could be enormous.
So it looks like the next frontier of the boom is in those unsung heroes linking all the processing power together.
I think so.
Definitely something to keep digging into. Thank you for joining us for this deep dive.